Maybank posted strong fourth quarter results today, with earnings climbing by 9.1% on the back of higher net interest income and Islamic banking income. The lender's net profit came in at 2.3 billion ringgit, while quarterly revenue rose 3.7% to 12.2 billion. It has proposed a dividend of 32 cents per share. For the full year, Maybank's net profit rose 7.9% to 8.1 billion ringgit, while top line was up by 3.8% to 47.3 billion. On its prospects, Maybank says it will maintain its balance sheet expansion in line with forecast economic growth of its three home markets, Malaysia, Singapore and Indonesia, and in tandem with the group's risk posture. This is against a backdrop of moderating global growth, as well as uncertainty over trade tensions. The group will continue building on its diversified franchise and footprint to expand income streams. Barring any unforeseen circumstances, it expects its financial performance for 2019 to be satisfactory. Telekom Malaysia reported a 75% slump in fourth quarter earnings after taking a massive hit from higher finance costs, lower forex gains on its borrowings and higher tax charges. The fixed line operator says net profit plummeted to 69.7 million ringgit, while revenue shrank by 3.5% to 3.1 billion ringgit compared with 3.2 previously. The group declared an interim dividend of 2 cents per share. For the full FY18, TM's net profit fell 83.5% to 153.3 million ringgit, while revenue declined 2.2% to 11.8 billion on lower revenue from voice, data and non-telco related services. Acting Group CEO and COO Imri Mokhtar describes 2018 as one of the most challenging years TM has ever faced, and 2019 won't be easy for the industry either. He says the group is continuing on its next phase of transformation towards shaping a new TM that reinforces customer centricity. The government's plan to take over 4 highways from Gamuda will save 5.3 billion ringgit in taxpayers' money. Finance Minister Lim Guan Eng says this is because Putrajaya wouldn't have to pay compensation to the concessionaire for freezing the toll rates until the end of each concession period. He adds that commuters would benefit as well, saving up to 180 million ringgit per year with reduced traffic jam during peak hours. The 4 highways involved are the LDP, Sprint, Gesas and Smart Tunnel. According to Lim, Putrajaya chose to take over these 4 as the market share of toll revenue collected on these roads, excluding plus-operated routes, come up to a collective 48%. However, he admits that the estimated savings of 5.3 billion ringgit do not include the acquisition cost of these highways, which he hopes would be fair and reasonable. Affin Hwang Capital values Gamuda's stake in the 4 highways at 4.78 billion ringgit. Putrajaya aims to complete the acquisition in 6 months. Malaysian Resources Corp saw its fourth quarter earnings shrink 73% to 26.4 million ringgit. This was mainly due to the delay on the LRT3 project, while negotiations were being held with Putrajaya to remodel the deal from a project delivery partner regime to the current fixed price contract. Group MD Imran Salim called it a major challenge which affected the group's performance considerably. However, now that the new contract has been signed, the deferred revenue will begin to flow again. MRCB's numbers were also affected by the absence of one-off disposal gains recognised in 2017. Revenue climbed nearly 7% to 374.1 million ringgit. On a full-year basis, net profit fell 37.5% to 101.2 million ringgit, while revenue slipped by 29% to 1.87 billion ringgit. Nestlé Malaysia reported a 2% contraction in fourth quarter net profit to 123.8 million ringgit due to lower sales. Revenue for the quarter rose 5.2% year-on-year to 1.35 billion. The company declared a final dividend of 1 ringgit and 40 cents per share. For the fiscal year of 2018, Nestlé's earnings rose 2.5% to 658.9 million ringgit on the back of a 4.9% increase in revenue to 5.5 billion ringgit from the previous corresponding period. The F&B giant says its strong domestic performance was supported by improved consumer sentiment as well as its successful innovations and renovations. Going forward, Nestle expects some pressure from higher commodity prices and also sees more volatile demand in its main export markets. Still, it's confident of delivering good results in FY19, backed by strong demand for its brands in Malaysia, plus the plans it has already in place to continue generating sustainable and profitable growth.